Hello there, this is the Bookkeeping Master on YouTube. Welcome to this video. If you haven't already done so, please watch the video previous to this one, which is a quick guide to being a sole trader, because this video is sort of a follow-on from that video, and this video will give you a quick guide to trading as a limited company, or a quick guide to limited companies. So in my previous video, I had a number of questions appear on the screen, which I answered. I will do the same format for this video also. So the first question is, what is a limited company? A limited company is a business that has registered to become limited, and there are lots of different forms of limited companies, such as LTDs. They're the most common form, I think, amongst smaller businesses, which are private limited companies. So LTD, you might see something called Essex Roofing Limited or Essex Roofing Ltd. So that's a business that has become limited. So it's a limited company. It's no longer a business, it's a company, a limited company. Another common form of limited company is public limited companies, PLCs. Now, these companies are generally companies that have registered for open investment. So companies that are registered on the London Stock Exchange are PLCs. They're open to public investment. So PLCs, public limited companies. So that gives some insight into private limited companies, LTDs. Obviously, they're not open to public investment. And then another common limited company is LLPs, limited liability partnerships. And these are very similar to private limited companies, LTDs, but it's obviously a partnership. So if you think of a partnership in a business sense, this is a partnership that has gone limited. So the main characteristics of a limited company is that it's generally more established than a sole trader. But limited companies can vary in size. They can be big, large businesses that employ lots of people and have a £1 million plus turnaround. But they also can be smaller businesses. Sometimes limited companies only have one employee. So they can vary quite a bit. So there are some exceptions to the rule of the size of a limited company. But quite often, as explained in the previous video, businesses generally start off as a sole trader or a partnership and then later on become limited. So the next question I want to tackle is profits. So in the previous video I spoke about business profits. Let's talk about limited company profits. So any profits that a limited company makes are subject to corporation tax, and then any of those profits that are distributed to the owners of the company or shareholders, these are not referred to as drawings like a sole trader. They're actually referred to as dividends. So your dividend is a share of the profit, and then you don't have an owner as such, you have directors, and directors can also be paid a salary. They can get a wage. So what are the advantages of being a limited company? The main advantage, from my point of view, is that the company liability is limited to the amount invested in the company. So in a sense, your personal assets are ring-fenced. The company and the shareholders are separate entities. So if you have a business and it goes limited and you owe a lot of money and the company goes insolvent, you won't necessarily have to cover all of those company debts. So that's one of the main advantages to having a limited company. There are some tax advantages to having a limited company. Operating through a limited company can give off more of a professional image, And if you're going to work with some very large businesses, big corporations, some of them will only work with you if you are limited. They're not interested in working with sole traders. And there are some other advantages too, such as if the company is registered, then the company name is protected by law. And also you have that shareholder investment available to you as a company. You can have other shareholders and receive third-party investment. So what are the disadvantages of being a limited company? Well, there can be some tax disadvantages to operating through a limited company. So in advantages, there can be some tax advantages, but there also can be some tax disadvantages. It all depends on a number of factors, but tax can work either way. Another disadvantage is that accounting, admin, and legal responsibilities are generally a lot more complex than a sole trader. And because they're more complex, they obviously cost more money, they take more time. And it's not as simple as operating as a sole trader. The final accounts for a limited company are usually referred to as statutory accounts. And these include, by law, a profit and loss statement, a balance sheet, notes about the directors, and a director's report. So once again, a lot more complex than a sole trader. But that's just a quick guide to limited companies. If you haven't watched the video previously, then please do so. Thank you for watching. Please like, please subscribe. Please watch more of my videos. If you go to my website, freebookkeepingaccounting.com, you'll see that I offer an exclusive bookkeeping and accounting course. It's very cheap, it's about £45 or something, and you might find it of great use. Thank you for watching.